Hey guys, the real deal in real estate right here, and I've got some news that's going to challenge the doom and gloom headlines that you've been hearing and seeing all over YouTube, the clickbait videos that get you sucked in that the real estate market's going to crash in 2025. But today, as usual, the no fluff in real estate, and the market's not going to crash in 2025. Now, this is not just my opinion. It's backed by some hard data and expert analysis. So if you're a buyer, seller, or just someone wondering if we're headed for a housing meltdown like 2008, this video is for you. Let's dive into these 5 key reasons why 2025 will not be the year of a housing market collapse. Well, reason number 1, the biggest one yet, and you've heard me talking about it before, inventory is too low. I told you I'm going to give you the hard facts, but a balanced market, right, operates between 5 and 6 months. So if there's 6 months of inventory, there's enough homes that are available to meet the buyer demand without tipping the scales one way or the other. So with that in mind, when you look at the NAR, National Association of Realtors, back in September, they said that the housing market had just 4.3 months of inventory. Now, that's up from really low of 1.7 months during the peak, and that's why it was so crazy back in the pandemic in 2022, but still well below the threshold for the balance. So what does this low inventory mean, Diane? When we have low inventory, buyers have fewer choices, right? Scarcity drives competition, which in turn keeps prices high. We've seen this repeatedly over and over again in markets across the country. For example, despite mortgage rates hovering right now at 7%, home prices are still rising nationwide. Some areas lower than others. But the nationwide median price right now hits $404,500 in 2024. Now that's the highest September figure ever. And that wouldn't happen if there were a flood of inventory pushing prices down, right? So why is the inventory so low? Well, dive a little deeper, and the forces that are driving this, and we talk about this a lot in the past 4 years, we call it the locked-in homeowners. You know, Redfin said, I think mid-2024, there are more than 80% of homeowners have mortgage rates below 5%, and over 60% have rates below 4%. If you compare that to today's rates of 7% or more, it's clear why these homeowners aren't selling. They're not moving. Why would you move when you have a higher monthly payment and possible significant loss in equity? So we call that the rate lock effect. It keeps millions of homes off the market, all right? So according to Zillow, about 25% of homeowners who might have otherwise have considered selling say they're holding off due to high rising rates. And this creates what I call a bottleneck that directly impacts inventory. I know that I have 325 home sellers that come to my seminars that say they're going to move, and about 250 of them said they're going to move in the last 5 years since the pandemic, 4 years, and they haven't moved. So that shows you that I'm just a little portion of that big pie. Second, you got population growing. It's outpacing housing supply. Since 2010, the U.S. population has grown over 20 million people, while new construction hasn't kept the pace. The gap between population growth and housing supply has widened significantly. Freddie Mac said that the U.S. is facing a housing shortage of nearly 3.8 million homes as of 2024. And this is even in the face of economic uncertainty. However, with the election over, Trump is our new president, home sellers have called me. I think we're ready to move the next 2 years now. They're actually making a move. I've had over 10 calls since the election, and all due to people who are holding back. And all of my buyers, sellers are empty nesters. I have a lot of empty nesters in my group. And then you have those reluctant sellers. They're not in a rush. There's no reason to move, especially if they perceive the market as being unpredictable. Depends on what news station they're listening to, of course, as well. This further limits inventory, right? Keeps prices stable. A lot of those people thought that they were going to move in 2000 and have not, and they've just got so comfortable staying, they're just going to stay. And we also have builder challenges too. They're really working hard, builders, to bring homes back to the market, but there's so many barriers with building a family, new home construction. There's labor shortages, and materials are just skyrocketing, zoning regulations. As a matter of fact, the National Home Builder Association reports that in 2024, construction costs increased by 9%. The average time to complete a new home stretched to over 8 months. But I'm going to get to that in a little bit about the home builders. And I would say that the data speaks. There's no inventory flood in sight. It's bottom line. Low inventory, fundamental driver of the market stability. So prices are staying strong, buyers are competing for what little is available, and sellers have no incentive right now to flood the market. So if you're waiting for a crash, you might be waiting for a very long time. The numbers of trends analysis just all point to one conclusion: low inventory is going to be here for a while. It's going to keep the market strong. And one of the biggest reasons why a crash in 2025 is not going to happen. Now, the second reason, I kind of led into it before, we talked about builders. They just can't keep up. They've been playing catch up since 2008, and they're nowhere near closing this gap. So why is that? Why are builders, not building, or what's going on with the builders? Well, a lot of them are hit hard. Many construction companies went bankrupt. Development projects were just abandoned. Just the whole industry was just pulled back sharply. And there's a lot of scars here. I don't think they've healed. I know our family, we built on your lot. Wasn't as bad, but I know there's a lot of things that are frustrating things that are going on with us being home builders, such as rising costs. I mean, that's really been the biggest thing, really squeezing builders right now. Land cost, that surged in the past decade. The National Association of Home Builders said that the cost of developed land has increased by nearly 50% since 2012. 50%. So what's going on now? The builders are paying a premium for smaller lots, and it cuts into their profit margins and make it harder to justify any really big, large-scale developments. And the material costs, that I know very much from being a daughter and a sister of a custom home builders, they're soaring. Now, some have stabilized, but the most are basically really high. Lumber, for example. I know framing lumber peaked at over $1,500 per 1,000 board feet in 2021 compared to a pre-pandemic average of 400. Okay. Now, even as prices, they have moderated, but when you combine this with the cost of other materials, concrete, drywall, roofing supplies, all that, it just all adds up. And of course, then the costs get pushed down to the buyer, right? That's how it all works. And you got labor shortages. God, where did all the workers go after the pandemic? Where are they, hiding somewhere? I don't know. But National Association of Home Builders says that 65% of builders reported labor shortages in 2024, as many construction workers, they just left the industry. They went looking for a more stable job or a stable industry, because the U.S. construction inventory, heavily relies on immigrant labor, and stricter immigration policies also have added to the shortages. So if you don't have enough skilled workers, builder can't meet demand, even if they have the resources to build. That's kind of what's going on there. And lastly, my favorite, oh my God, regulations that make delays, because the permitting process for new developments has been increasingly complex, time consuming. These regulatory costs now account for 24% of the price of a new home, because the bureaucratic red tape slows down the construction process. It does it all the time, happening right now in one of our jobs, and reduces the number of homes builders can deliver the market. So we're building fewer homes per capita today than almost any point in the last 50 years. And Freddie Mac says that we're undersupplied by 3.8 million homes. Not a temporary blip here. The bottom line here for builders, because their inability of them to keep up with the demand, that's a real critical factor in this housing market and the supply. And it's going to take 5-10 years to fully address this housing shortage. Rising costs, labor shortages, these regulations, and cautious building practices are all contributed now to the supply deficit. Okay, so this is very challenging for buyers. I know they talk about it all the time. They're also a key reason why the market is unlikely to crash in 2025. And a lot of buyers have been calling me recently, wanting to get out there, which leads me to the next reason why the market will not crash is that demographic trends I'm talking about. That's really driving demand. But because if you look at the numbers, you look at this, you look at millennials, right? They were born between 1981 and 1996, around there. They're the largest living generation in the United States, surpassing baby boomers, according to the U.S. Census Bureau. Millennials number approximately 72 million people, and the majority of them are now in their prime home buying years, age 27 to 42. Because that typical home buyer, is around 34. The average age is about 34 years old. And a real big portion of the millennials are either at this age or they're approaching the milestones. And a lot of them delayed their home buying because they weren't certain about the economy, or they had student loan barriers, or just the sheer competitiveness. They just hate it. They don't want to be competitive. Don't want to be in a bidding war. Now they're entering the market in masses and also creating this pent-up demand. I'm getting calls from all my clients' children, and they're saying, please, twice, please, 3 times, help me find a house. But a lot of them just don't want to get caught up in the competitiveness, but a lot of them say, you know what, I got to buy a house. I need to do it now. So, and these people, the millennials, they're accounting for 43% of homeowners. They're the largest home buying cohort for the 10th year in a row, right? And I believe this whole supply thing is for people living in the first-time buyer houses can't move because the empty nesters aren't moving, right? And I've said this before, we need to stimulate the housing market by giving incentives for empty nesters to fly the coop. I've been saying it for a while. They move, This buyer moves up, first-time buyers have houses. That's how it's going to wave. That's how I feel it should be done. And the millennial buyers, this is really not a short-term thing. It's a long-term thing. We also have Hispanic Americans as a growing force in our homeownership. The population, according to the U.S. Census Bureau, the Hispanics are the fastest growing racial ethnic group in the country. Population of over 62 million out of 2024. So why does that matter? Well, they want to have a home too. They have a strong cultural emphasis on home ownership, and they're entering into the market in record numbers. The Urban Institute, they project that the Hispanic households will account for 70% of home ownership growth over the next 2 decades. That's amazing. That's great. And their home ownership rate did rise to 50%, just over the 50% mark in 2023. And that's the highest ever recorded. Okay. And now you have to add on the fact that they got this remote work still going on, because 23% of buyers said that remote work has a major factor in decision to move. They want larger homes. They want extra room for their home offices, or they want to live in the suburbs where they can get more space for their money. And what happens is the secondary markets are in big high demand as people are relocating from the more expensive metropolitan areas, right? They're moving from like Philadelphia out. I have a client who moved out to Berks County, which is like an hour and a half just to buy a house and get something what they wanted, you know? So a lot of the workforce, I think it was like 35% of the workforce still works remotely at least part-time. So it's a complete flexibility that allows people to buy a home in areas that were once out of their reach because of the commuting constraints and back and forth. They just couldn't do it. Does it make sense? And lastly, the affordability. How do these buyers affording? Well, they're finding really creative ways. One, bank of mom and dad, or basically financial assistance by their family members. Millennials are getting help for their down payments. Bank of America said that 28% of first-time home buyers got some financial assistance from relatives, right? And also, they're relocating to affordable areas we talked about. According to 2024 Redfin report, 32% of home buyers search for homes outside their current metro area. They're just getting out. Most of that's due to because they're not commuting. And then you have co-buying and roommates. A lot of young buyers are pulling in resources and they're buying homes together because there's a fact that NAR report that 17% of home purchases in 2024 involved co-buyers that weren't married couples. And then you have the adjustable rate mortgage that become very popular. 12% of mortgages in 2024, up from 4% in 2020, because you can get in at a lower rate. They want to get in. They just want in. They want into this market so badly. So demographics don't lie, guys. Millennials, Hispanic Americans, they all want homes, and remote work is also helping with these demand. So again, if you're waiting for the market to collapse, you might be waiting a long time, forever maybe. Demographics are ensuring that demand will remain strong for years to come. Now, reason 4, lending standards, rock solid, and a backbone of a stable housing market. And a real critical reason why a crash is not likely in 2025. Because back in 2008, when it all went bad, they had liar loans. People didn't have to prove what they made. They just said, hey, I worked this much. They had subprime lending. They were giving loans to buyers with very poor credit score. The average credit score now is like 770, and it was like 650 back then. And the adjustable rate mortgages were enticing buyers to come in at these low rates back in 2008. And mortgage-backed securities were all big at that time. So then we had a result of 6 million homes were in foreclosure back in 2009. And some markets their prices fell like 50%. But lending standards have changed. Have they ever? They want to know everything about you. With, like I said, the credit score is like 772. Now you have to actually document your income. And most of the loans, I think over 95% now, have to have some kind of full documentation. And the debt to income ratios, it's like 33% now. And in 2008, it was like 50%. They were lending so much money, people couldn't even possibly pay the mortgages. And the down payment requirements, the average person now putting down 13%. That was never heard of. Back then, it was 0%. We still have FHA out there, but if you're an FHA buyer, it's tough to compete against these cash and 20% down. Home sellers just don't want to handle or deal with FHA. The bottom line, lending standards today are really tough. So another reason why the market won't crash. And lastly, just the foreclosures. I talked about that a lot, a whole video about it. It's not going to crash because there's not many foreclosures. They're very minimal. Prices are rising. So if you're staying in your house long enough, the prices rise, you'll have enough money to sell your home if you get financially in a bad way. The average homeowner gained $34,300 in equity in 2023 alone. Then we had the foreclosure programs that prevented the crisis back when the pandemic hit. 8.6 million loans were in forbearance in 2020, but now we only have 100,000 remain in forbearance. All that adds up. We have really low delinquency rates now because people can just sell their house if they have to get out. I think the delinquency rate for 2024 last quarter was like 3.37, far below the 10.1% in 2008. And with these tight lending standards, it's just, foreclosures are just not happening. I believe that I've said in my last video that they've accounted for less than 1% of all home sales compared to almost 30% in 2008. So that's the difference. So you won't see a flood of foreclosures coming up and homes that you can buy at a cheap price, because even those foreclosures are sold at a high number, okay? Just people are just better positioned. They're more stable homeowners, and there's a steady demand. Even if a small number of foreclosures came on the market, it's still not going to help the inventory issue. So bottom line, there's no reason to fear a flood of distressed properties in 2005. It's not going to happen. So there you have it. 5 solid reasons why the real estate market will not crash in 2025. Low inventory, cautious builders, strong demand, and strict lending standards, and minimal foreclosures. All working together. All that. It's a lot to keep the market stable. Does that mean it's easy to buy or sell right now? Well, selling, yes. Buying is a little tricky, but not necessarily. But it does mean that you don't need to panic about a market collapse. The key is understanding the facts and making smart decisions based on them. That's why I'm here to give you the real deal in real estate. If you found this video helpful, smash the like button. Please subscribe to my channel. I need to get to that 1,000 by the end of the year. And share this channel with someone who's worried about the market. Don't forget to drop your questions and comments below. What's going on with you? How can I help you navigate the market? Thanks for watching. I'll see you on the next one.